Hey guys, Toby Mathis here, and today we're going to be talking about basically the advanced tax credit, the child tax credit that changed under the American Rescue Plan for 2021. So this would be called the 2021 child tax credit and advanced child tax credit payments. So let's get over the basics. First off, what's a child and who is eligible? So a child, they're going to put it into two categories. Anybody who is 17 or below at the end of 2021 is going to be eligible. Then if they are 5 or below, they're going to get an enhanced payment. So the first category of everybody that's basically 17 and below, and this is a big change from the previous law because 17-year-olds wouldn't be qualified because it was 0 to 16. But for 2021, a 17-year-old qualifies and you get $3,000. If you have children that are 5 and below, they get $3,600. And the advance payment is half of that amount for both categories. So it's $1,500 or $1,800, or better put, it's $250 a year from July to the end of the year, or $300 per month, per month for each month till the end of the year. So that's 6 months of $300 payments or 6 months of $250 payments till the end of the year is the advance portion, which will take up exactly half of the amount that you're eligible for. The second half you would take off when you file your return. Now, this is a refundable tax credit, meaning it's dollar for dollar of any taxes owed. If you do not owe any tax, then they send you that money. That's why you're starting to receive the first payments in July of 2021, and you're going to receive payments every month thereafter. This is based off of your 2019 tax filings. So what do you do if you believe you should be getting the payment and you have not received it? There is an online tool that you can go to the irs.gov and you could apply, or you could file your 2020 taxes and they immediately start it up. Or the flip side, you know that you don't have an eligible child, or you had an eligible child in 2019, but something's changed. So maybe they're with another parent, maybe they're being watched more than 50% of the time with somebody else. And I'll get into some of the eligibility here in a second. But maybe you're worried, then you can unenroll, and there's also a tool for that. So let's kind of break into this. I'll give you guys some examples, but let's first break into the facts. What is a qualifying child? So it could be a taxpayer's son, daughter, stepchild, foster child. It could be a sibling, whether it be a brother, sister, stepbrother, stepsister. It could be a descendant of any of them. So even some nieces and nephews would qualify, and you provide more than 50% of their support, financial support, and they lived with you more than 50% of the year, and they are qualified as a dependent, and you had a main home in the United States. So I just threw a lot at you. I'm going to go back through that again. So it's your kids, stepkids, foster kids, brother, stepbro, brother, sister, some way, descendant of any of them, plus you provide more than 50% of their support. They live with you more than 50% of the time. They qualify as a dependent, and you have a main home in the United States. Then you would qualify. Now, what about phase outs? We know that this tax credit is there for people, but we also know that they take it away if you make too much money. So there's actually 2 phase outs. The first phase out takes you back to the 2020 law, which was $20 or $2,000 per child. And the way it works is if you are single and you are making over $75,000, for every $1,000 you make over 75, you would reduce the amount of payment that you are eligible for by $50. So $50 per 1,000. So if you're going up, let's say it's, what is it, 10,000, then you'd go 10 times 50, it'd be $500 less. Yeah, so if you make 85,000, you make $95,000, it'll be 1,000 less. So let's say that you have a child who's 10 years old, you would be entitled to $3,000, but you make 95,000. It's going to reduce the amount that you would receive to $2,000. You still receive it, but it gets reduced. If you get too much money, then you would have to pay some of that back, is basically how it works. If you receive advance payments that you weren't entitled to, you'll have to pay it back. It'll end up being a tax owed because you are not entitled to the refund that you received. So that's why it's really important to know whether you actually are the rightful owner of those funds. So just think of children and parents separate, or somebody's watching the children and they don't reside with you more than 50% of the time, and you don't meet one of the criteria, somebody else claims them as a dependent, they're going to be the one that's entitled to it. Even if they send you the check, you're going to end up returning those funds in the form of tax payments. All right. Now, so I said there's two phase outs. The second phase out is for single persons, is if you make more than $200,000, then the same $50 per 1,000 phase out applies. So there's the first phase out. You make over 75,000. For every $1,000 over, you reduce your payment by $50, and it caps down. You cannot go below 2,000, the previous. So it hits that bottom. So if you have a child that's 4, you're going to be lowering it down for a lot longer, because it's $50 for every 1,000, right? But you can't go below the 2,000 until you get to the $200,000 number, and then it starts up again and starts lowering the 2,000, $50 per $1,000 that you're over. If you're married filing jointly, that same process kicks in. If you remember, it was 150, and then it phases out till you hit 2,000. Then it kicks back in at $400,000. So you make over 400, and you're getting the $2,000 credit. So if you make $401,000, you would get $1,950, because it's $50 per $1,000 over. So you're $1,000 over. That's $50. It reduces 2,000 minus 50. You're entitled to the tax credit of $1,950. I hope that makes sense. I'm just letting you know it's there. Your accountant obviously will do the calculations for you, or you can go online to irs.gov and do the calculation. Now, how is this different than the previous? Well, number one, the amount's different. You went from 2,000 for eligible child to 3,000 and 3,600. So we never used to get, it was 0 to 16. You got $2,000. Now it's 0 to 5. If they're going to be born during this year, you're entitled to it. If you have a child that's 6 to 17, so the 17-year-olds are now included, you're going to get 3,000 as long as it's 2021, that they don't turn 18 in 2021. If they turn 18 in 2021, they're ineligible. You do not get the tax credit. The other thing is that this is not taxable. This is not income. This is literally a tax credit that is refundable to you. So again, if you owe $1,000 in tax, I owe $1,000 in taxes, and you have a tax credit of 3,000, $1,000 of the tax credit gets applied to your tax bill. So it goes bye-bye. $1,000 minus 3,000 is now 2,000. That gets refunded to you. So that's how much you receive. So let's say that you're getting 6 months of payments of $250. So you're going to get $3,000, and you're getting $250 a month. So you're going to get $1,500. So $250 times 6, you'll have $1,500 that you received before the end of the year. So they sent you checks. You do your taxes, and you're owed an additional $500. They're going to send you the $500, because remember, hey, I only owed a little bit, owed 1,000. Take that 1,000 off the 3. They owe me an additional $500. They will send you $500. The U.S. Treasury will send you $500 under that scenario. So again, big 10,000 foot view. What is this thing? It's a tax credit for kids. There's no limitation. So if you have 5 kids, 6 kids, 7 kids, it works for foster kids, step kids, your biological children's brothers and sisters, um, whatever category, their children, so nephews and nieces, so long as you're meeting the criteria, providing half their care, they're a dependent of yours, you're providing half of their support, and you're providing, and they're residing with you half, more than 50% of the time for the year. And it's a house, your main house is in the United States, then you're going to qualify. And so again, they go off of your 2019 taxes. If you believe that they erroneously left you out, you have 2 choices. You can go into the eligibility, go into irs.gov and say, hey, I'm eligible, or file your 2020 taxes with the right information. And within a few weeks after you file your 2020 taxes, the IRS says that they'll start sending out the checks. So you'll know. All right. And just remember that if you are in a situation where maybe children, the schedule's changed or something, and you have somebody who's not, you're getting credit for, that you're not eligible to get the tax credit on, you can opt out. So I would suggest doing that rather than taking the money and having to pay it back at some point in the future. So remember, $3,000 if they're 6 to 17 during 2021. It's $3,600 if they're 5 and below, and half of it gets paid out over the last 6 months of the year, and the other half is a credit that is applied to your taxes, which is refundable, that if you do not have taxes that meet that amount, they will refund you the difference. So I hope that helps. I know that was a mouthful for something that they said was a simple change, but the American Rescue Act, there was nothing that was simple about it. There's always some air of complexity, but as always, we got you covered. I want to make sure that I broke it down. I've read a lot of articles out there that have a lot of erroneous information again. And you can always go in and ask irs.gov. They usually put up some pretty good FAQs and some good information, and they have a few tools to determine eligibility that you can go in there and plug in your own data to see what you're entitled to, just to make sure to cure any anxiety. So if you're receiving checks and you're like, oh, shoot, this seems too much, or I'm not sure I'm eligible, you can go in and find out so you know whether you're going to be given it back. Again, good luck and God bless.